Lambton Business Development Corporation, and Tuesdays at 10 with Jen, where we will discuss all that impacts business. I am Jennifer, your business advisor and engagement officer. I will be your host in the weeks to come. The S1E Lambton Business Development Corporation was founded in 1988 as a nonprofit community-based corporation backed by federal government funding. We want to reduce small business failures and empower business owners to succeed by providing access to funding and resources they need to build stable work environments and sound business plans. We offer free business counseling and flexible and repayable loans for new and existing small and medium-sized businesses. Today's topic: during tough economic times, what can a business do to tackle escalating costs? Between the COVID-19 pandemic and the Russian invasion of Ukraine, along with other compounding factors like backlogged supply chains, economies have been disrupted around the world, pushing inflation to some of the highest levels in many years. Factored with an increased cost of living and increased prices, it is difficult for a business to feel optimistic about brighter and greener days. However, these cyclical times do not last forever. It's important for a business owner to be aware of the various dynamics surrounding their economic circumstances and to forge ahead to brighter days. But one must remember to be prepared. A business cannot control the recession or the economy, but a business can control how it reacts and what it does to prepare, including getting comfortable and more familiar with cash flow, debt, and inventory management. It's important for business to be proactive and not reactive in these circumstances, or it can be costly. Experts believe these important questions for an entrepreneur need to be asked. Where is cash going in my business, and where is it coming from? To what extent are my profit margins improving or declining, and why? To what extent am I effectively managing cash flow relationships with my customers and my suppliers? What, if anything, can I do to better manage the cash flows that flows in and out of my business? I'm going to say something that may provide some uneasiness for some. Become best friends with your financial statements, regardless if you are utilizing the services of an accountant or not. In this case, an income statement is beneficial, but a cash flow statement is even more important. This document complements the income statement and balance sheet. Financial statements should not be just utilized at tax time. They are an ongoing, significant resource tool for the business to get a clear objective of where the business stands financially at any given time, which is very important for healthy business financial hygiene. The cash flow statement is a document that shows how a company's operations are running financially, where its money comes into the organization from, and how money is being spent to assist with operations. It shows the relationship between the company's income statement and balance sheet from one reporting period to the next. The cash flow statement helps its creditors and lenders determine how much cash is available for the company to fund its operating expenses and pay down its liabilities and debts. This is referred to as liquidity. The cash flow statement is a beacon that tells the owner and other stakeholders whether a company is on solid financial ground or not. As mentioned earlier, this statement can be used to make better, more informed decisions about expenditures, most especially in financially trying times, like right now. In the operating activities section, this statement analyzes and reconciles the net income from the income statement to the actual cash incurred by the organization, either received from or used for operating expenses, and adjusts net income for any non-cash items like depreciation expenses. Then it adjusts any assets and liabilities paid with cash. It shows how much of the company's earnings after tax have been considered as retained earnings. This is advantageous as it shows how much cash moved through the business during the year. We will be discussing more about financial statements and their features, advantages, and benefits in future Tuesdays at 10 with Jen sessions, so stay tuned. Once you're familiar with the cash flow statement and where the business stands financially, it's time to take care of that cash flow. Running out of cash is a concern for business during these economic times. It's important to become familiar with current cash balances and monthly sources and uses of cash for the business's operations. This provides an opportunity for the business to send out any outstanding invoices and analyze any accounts receivable. This can provide insight as to what customers are consistently late or overdue with payments. It's a great time to resolve these issues, aggressively collect these debts, and review any payment procedures that may be lagging. It also resolves these problems before they become bigger financial issues for the business. Software can help keep track which customers are falling behind if need be. Once this is completed, a cash flow forecast for the next future 6, 12, or 18 months is imperative to guide the business through any variances that cannot be overlooked at this time and deal with these in a timely manner, or it can be costly for the business. Try to be accurate, even a little pessimistic as possible. A forecast that overestimates income and downplays expenses is misleading and can be regarded useless, for lack of better terms. This statement can inform whether lenders may be required, as well as when and how much. This document should be reviewed on a weekly basis. Yes, I said weekly. If an investment or expenditure cannot be canceled, assign a team with respective sales and revenue targets for this task. Are there any industry benchmarks that can be considered in spending and compared with your business? Remember to be prompt and prepared with invoicing and ensure to review payment terms and collection strategies. Also, reevaluate the business's budget currently and ensure that the business operates within these boundaries. This is always a good practice, but more imperative to reevaluate now. A good business practice is establishing an emergency business fund. This emergency cash fund should cover at least 6 months of essential costs for the business operations, like compensation for utility costs, key employee expenses, and inventory costs. This is another form of insurance for the business to maintain operations during these times. Cutting back on expenses may not be an option, as it can be very challenging for some businesses. Whatever is cut should not compromise quality during this time and should be virtually invisible to your customers. Perform an audit of current expenses and spending. It is helpful to begin with the biggest costs to see what modifying can be done regarding reductions or asking suppliers for additional discounts, or ensure to pay early to take advantage of these reductions if possible. Most suppliers are willing to make price modifications versus losing the business completely. Some minor tweaking can lead to greater savings. Sometimes a tough decision needs to be made about eliminating spending in one area completely. Analyze current contracts and try to explore free resources. Can buying in bulk save money for the organization? This will be contingent to the business and the nature of its industry. Can this business partner with another business to share in costs and benefits? Is it time to consider more energy efficient operations and having a local service provider do an audit to highlight any recommendations for decreasing energy use? This pays off in a multitude of ways. It saves the business money, considers the business's carbon footprint, and builds the goodwill into a marketable venture and helps our environment and future generations. Also, do not be afraid to shop around for better, more favorable expense rates, like insurance. It's not personal, this is business, and it's good financial business hygiene. Another way to save costs is to look at the business processes and automating any of these processes that are manual tasks by reducing excessive service costs. Investing in the latest technology can lead to improved efficiencies, increased production, and reduced costs while moving the business forward. Another way to cut costs is to shift from full-time employees to job sharing, reduced work weeks, and shifting from paid employees to contractors until more viable times present themselves. A hold on pay increases may temporarily need to be imposed until better financial gains are achieved. We will be focusing on the labor force during recessions on a future session. Educate your employees about utilizing financial discretion and how they can control costs and expenses and maintain a thrifty attitude at work. Offer incentives to foster employees to think of creative ways on how the business can lower its expenses and save money. Repurpose past rejected cost-saving ideas. This helps create a zero waste culture within the business and helps motivate employees in times when motivation can be rather difficult. A business should never stop marketing, an expense that can pay itself. However, marketing initiatives should be focused on the business's main customers and clients. 80% of the sales come from 20% of the consumer base. Focus on these. And if loyalty can be rewarded in a creative form, like access to new products, services, or special discounts, do this. These existing customers are much cheaper than acquiring new ones. Upselling and cross-selling to these customers can be advantageous as the customer is already familiar with the business and the product service offerings. Promote these products and services that are the strongest sellers and what the company is known for. This may require ceasing production on new goods and services until better economic circumstances. Focus on less expensive marketing initiatives and get familiar with social. Platforms such as Instagram, Twitter, Facebook, YouTube, and TikTok are fabulous and inexpensive ways to get to the customer while collecting analytics the business can use. Send out short and creative emails or a newsletter, but ensure to have the consumer's permission first. There are many resources online to assist with these ventures for free. Customers are lacking a lot of financial confidence these days, so use this time to build confidence back in the business's brand and its staying power during these times. An economic slowdown can be good for businesses in the sense that it allows a business an opportunity to sit down and take the time to understand and analyze where they can improve and refine. It gives a business owner an opportunity to see your business with fresh eyes and address waste and inefficiencies that may have been overlooked previously. Everyday costs can be balanced and pricing can be known to be reset to more manageable levels during these times. Businesses can take the time to call their service providers and try and negotiate better terms. This way, the business will be ready for when the economy starts improving. The business can remain competitive and be ready for better days. Using financial statements as real-time tools and not a one-time task at tax time is an effective and indispensable tool for the entrepreneur. A business taking the time to adapt to its new economic reality is more productive and conducive than waiting for the storm to pass and reactively approaching these ever-changing dynamics. Recessions can encourage the creation of small entrepreneurial firms that can compete with lower costs and innovations. They can force larger companies to examine the scale of their operations and how they are managed. Recessions change mindsets. It encourages businesses to live within their means, encourages savings for a rainy day, and forces a reevaluation of how money is managed. In the future weeks, we will be looking at how a business can creatively come up with ways to generate extra revenue for business when consumer confidence is down during this recession. Please come back to Tuesdays at 10 with Jen, where we will discuss different aspects impacting the business, the different functional areas necessitated for business, and all that is impacting the economy and your business. If you have any questions or would like more information about what we discussed today, please visit our website at www.slbdc.com or call us at 519-383-1371 for an appointment today. We care about your business and your success in our local economy.